Alrighty, welcome in everyone. Wine Wednesday here, coming at you, 7 p.m., 7:05 Eastern, fashionably late as usual. Um, Welcome back for those who are coming back from Good Morning Nasdaq. Welcome in for those who are coming in for the first time today. In fact, first question for chat, yeah, who just a crossover viewership, who typically comes to both or one or the other? Obviously, everyone here will say Wine Wednesday, but do we get a lot of two little double dippers for morning and night, or is it just one or the other? Very curious.
It's kind of interesting. Like if the names change, the comment in the comments.
Yeah, I mean, I see a few similar names, but you typically will see similar names in the morning and then similar names in the night. So you just never know who both comes both. Yeah, like P Daddy, both. P Daddy's the daddy. He's the man.
Your daddy's my daddy.
Yeah. So yeah, Knives is both. Very nice.
Joshua Schuster just wants to wine and dine us. Just night, he says.
Just nine. There we go. He's further here for the wine. That's all right.
Okay, I like to be wine and dine.
Don't we
Well,
all?
awesome, awesome. So before we get into everything here tonight, we're gonna get into a lot.
Whoa.
Kyle, what are you drinking?
Well, I just took a sip of my protein shake. As always, Wednesday, did hit the gym, came back at the gym, got a smoothie. However, didn't go as hard at the gym today and did it not so quickly or so soon to Wine Wednesday. So we have a red. You all know what it is because we have the last bottle from the 5 that I bought, which is brew. October's
Which
over,
is
but that doesn't mean the festivities can't continue.
which is still brewing.
Yeah, witches are still brewing out there. So we got our good spiced up red wine. Anyways, how about
Nice.
yourself?
I got myself a nice bottle of orange
Wow, that
over
looks
here.
like pumpkin October themed.
I'm just trying to match you. I went to my local guy and I said, "Hey, I need a nice Italian, something bold, something good. I'm not eating anything with it. I'm just drinking it for Wine Wednesday." He had lots of questions on what Wine Wednesday was. Um, Told him it's like kind of like a book club, but it's wine. And he's like, "Oh, so what are you reading?" And I'm like, "No, no, no. The wine is the book."
Yeah.
Um, but this wine was made by a guy named Jarno Trulli, and he's a NASCAR. This guy told me about all this. He's a NASCAR driver,
Wow.
and they used to call him the Truly line because he would never let anyone pass him. So he just created this huge line. He never won a race. He only crashed. But uh,
Wow. That sounds
Jarno
lovely.
Truly, cheers.
Cheers. Nice. Well,
And
alrighty.
what's the chat having? Let us know in the chat what you guys
Yeah.
are having.
When anybody in the chat is drinking, Wayne says water straight up, no ice. My man. I mean, that's the way to do it. I don't have it with me, but I do have water, no ice, and another bottle over there.
Really?
That's how I drink it. Yeah. Well, I put it this way: it's one of those bottles. It's not a what's it called? The fancy. It's not a Stanley or it is a cup that will retain its temperature, and then I just get straight water from our fridge, which is obviously cold, and then yeah, that's all I have for in the States cold for I don't know at least a couple hours, a few hours. So
I love my water iced. All right, so we got some people drinking water, some Don Julio. That's wild.
wow.
Uh, Brendan's having a Red Bull. Got to stay wired. Some coffee. Hope you guys are not on the East Coast. That sounds crazy to me. But whatever works. Tea sounds nice.
Isn't TF caffeine too, though? Or less? Or you can have no tea or no caffeine than tea?
You can. So should we get into our truths for the week?
Sure. You got truths? Let's do
Just
it.
jump right on into it and share the truths that
Yeah.
we have.
I would love to hear them.
Yeah. I had a little existential crisis the other day. Some thoughts came into my mind about trading, and I think I should share it with the group. That's what Wine Wednesday is all about, sharing the thoughts that we can't share with our significant others.
Okay. Let's hear it.
Um, so I don't know if you guys have, for those of you that are not Clovers, I've kind of taken on a different trading approach this year, much less discretionary and much more systematic, almost like algo based. Like what I do, an algo can learn and do. I'm just the human monkey that's pushing the buttons and accepting whatever fates that the data will lead me to. Uh, and it just feels weird for me because I feel like what's cool and what I want to like tell everyone is like in trading, there's not one right way or wrong way, and there's so many ways to skin a cat and make money in the markets, right? Like my first 3 years trading consistently, it was all about shorting first red days, right? And then the pandemic market broke out, and first red days no longer were really all that rangeful, they kind of just turned into breakouts. And so I started to just kind of flip it and trade a lot more breakouts. And like that was predominantly what made me most of my money in 2020 and 2021. And then 2022, 2023 hit, and I kind of had to redesign everything. It seemed like small cap, a bit more choppy. Seemed like longs I was getting offered on, and I really didn't, like that game of like, is this a landmine or is it not? Like it was not fun. So I redesigned everything, and I kind of looked at at your typical small cap through a different lens and said, okay, can I create a new strategy that kind of works that'll be better than what I'm doing right now? And it has been great. It's been very rewardful to go down this path. But it feels, Kyle, this is my truth. It feels like I'm less of a trader now. Like I used to like read price action, like read level two, and make discretionary feelings about when a stock is potentially topping out and within a daily structure and all that good stuff. But now it feels much more like, again, like I don't care as much as about those things, and those things are still happening. You're still trading DXYZ and DJT phenomenally. Um, but I'm also over here making money in a very consistent way without any real headaches. And sometimes I struggle. I'm like, is this what trading is, or is this just the spell that I'm in right now? And it feels just like this is what 2024 is like for me. It's just interesting to me that how much it changes over the years. What adaptation really looks like.
Yeah, that's where my brain went, which is like whether it was a small change or a big theme shift, like you've had your periods of years, or let's call it segments, where you've changed drastically, and it's fit what the market's giving you. So, kudos. That's literally the definition of a trader. So even though you don't feel like you're trading, you kind of have, So
Yeah. Well, it's just like, you see a Jack Kellogg like end of day trade log, right? I'm using Jack Kellogg because he likes to share them sometimes. And you'll see like there's like 12 tickers traded, maybe like seven. In my mind, that's like you're looking at everything that's trading a bunch of volume on the day, and you're trying to find a bias, a trend, an edge.
yeah, he's going
And
for it.
he's got like 7 to 9 tickers, right? And like that's never me. And I have pictures of trade logs back in the day where it's like I went 20 for 20 on a day. Like I like it's in my favorite
Oh
photos.
my
I see
god.
it where it's like there's 20 tickers traded. It was during the solar stock run back in 2020 probably, and it was like SOLO and all that like grouping of stocks. FCUV I think was one of them.
Yep.
And yeah, 20 for 20 first red days because that's just how many were extended, and they were all like 2 to 7K gains, and it was like a $25,000 day. And I was like, wow, that is not how I would make 25,000 today. Like that's just not what I do. So it's just interesting how it changes over the years.
Yeah, but also I think you and I have always been the same though. Of we don't necessarily. It's not that we don't agree with traders who trade a ton of things because that's their style. It's just not our. It's not in our natural disposition to be the guys who take 7, 10, 15 trades a day. I feel like you and I styles are aligned where we're always pretty particular, and even within the trades we're particular about, like we don't do a lot with them. It's like a couple entries, stop
Yeah.
loss, and then an exit or a profit. Right? There's not much zhuzhing up in between then, because
It's
regardless,
like it's like there's like a go ahead.
no, it's go ahead. What's up?
I was just gonna say like there's just a moment for like offense, and then once you like kind of position yourself and get your entries, there's like this pay like okay, that part's done. I got my risk, I got my entry. Now it's just like let's be patient and wait for that bigger move to happen. I don't want to scalp around and make too many decisions.
Right, you're waiting for the actual trade. Um, yeah,
I hate scalping.
no, I hate it too. I'm just not good at it. It's my weakness. But yeah, I think regardless what market environment we've been in or how I've adapted, it's that theme has been the same, which is I just don't trade everything. So whether it is a hot market and there's just a lot to trade, or it is like you said now, it's just like the DJTs, the DXYZs, the the once a month kind of big plays that I do take very seriously. It's still the same genre or style, right? Which is just very simple, not many arrows, and I'm looking for the move. I'm not looking for scalping a few times here and there and then looking for
Many
something
moves.
bigger and then trading around a core, and then I decide, let's be smart with it and downsize, and then I get bigger, and then you go smaller, and then you look at your chart, you have 17 billion arrows, and you're like, wait, what happened? So, but
Yeah.
that's a good truth there. So was that your only truth? Or do you have
Really,
another truth?
really have liked this whole like no, just that was the truth. The truth was just kind of that, and that it kind of blows my mind sometimes about how like if I watched a video lesson from me back in 2019, which they're probably still on Profitly, um, like I don't do that. Like
Yeah.
I right now I don't do that. It's not like that doesn't work anymore. It's just not part of my everyday activities like it once was. Making nightly watch lists, looking for the multi-day runners. Probably having BTCT on a watch tomorrow, and anything that's up like that kind of percentage with multiple days. And then now it's like I don't even want to watch that. I don't
Right.
care.
Um, right on. I feel you. I hear you. In the chat,
I haven't had a nice small cap breakout in a while with volume. Most breakout on light volume. I will contend that statement, and maybe it's not a small cap, but Fannie Mae just had a really nice breakout. $2 ticker, broke out of 240 and ran to 320 in a day and a half. It's pretty good. So,
pretty good one.
and has there been another breakout recently that I kind of remember?
PHUN was
I
a
mean,
good one.
DJ, yeah,
PHUN was good.
PHUN, yeah, PHUN over 8
Yeah, that was really good.
for sure.
But I do know what you mean, Duramax. 'Cause I had this conversation actually today with Matt Monaco, and he said something along the similar lines of like, he was predominantly a long trader, and actually we've been lazy and procrastinating, but we talked about it briefly last time that we'd get him on a Wine Wednesday, so we'll talk to him when he's available. But he was predominantly a long trader, right? For his first million, 2 million, the first 3 or 4 years of his trading, he was a long bias trader. He took a break, a year or two break. He's now come back. He's much more active as a trader. And now that he's come back, he was telling me today of like, I used to be long bias and now I'm short bias and now my longing is terrible. He's like, I can't make money long to save my life. And he referenced that like the breakouts that I liked, I just don't see anymore. So maybe that's what you're referring to. If because I do agree with Huddie, like there has been some good breakouts for sure. But I also, what you're saying, where it's like, yeah, I haven't really seen or heard of a lot of long traders that I usually see crushing it. So maybe on top of Huddie's truth.
And
What's up?
well, I'm just gonna add on. What's crazy is a lot of them are trading gappers.
Oh yeah, it's a shift for short selling's still the name of the game in small cap land, and so yeah, there's been like to your point, to Huddie's truth of adapting. It's like there just maybe hasn't been as good of an adaptation on the long side. Maybe there has, and I'm just talking out of my butt here because I'm not a long bias trader, or I'm not a strongly suited long bias trader. But I don't blame you, Drummer Max. I do see that slight theme for sure. So yeah, Huddie lost his degen trading style. I mean, yeah, at some point you gotta. I don't know,
I totally lost it.
either the degen takes you over you or you take over the degen, Um,
I don't know if it was like a moment of maturity, but like I remember when I first got into the market. I mean, you can imagine like 20-year-old me. I'm 30 now, right? Like 20-year-old me uh was like almost all in on every single play. Like I had no fear, and I knew how to cut a loss. I knew how to like pick a risk level, and I was always very specific about cutting losses. But like I wanted to get rich, and I wanted to have 5-figure days like immediately. Um, and that came with like a roller. Like I probably shaved 10 years off my life doing all of what I did. Um, and it worked. It worked really well. Like I learned really good habits with like having that kind of size. Like it kind of like sped up a learning curve about risk management, which I've always been pretty good about. But then over the years, once I made a bunch of money doing that, and the size got really big, I realized that the mistakes, like when they got really big, the mistakes became like not life altering, but like mentally damaging for me. Like it's not easy for me to go to sleep knowing that I lost 40K or 20K on the day, and it's just not easy for me to juggle. And then I ask myself why. Like what am I really searching for? How much money do I really want to make? And like what stress is it causing me? So I've kind of shied away from it. Like once the dollar amounts got big, and like I built my way up to 2, 3, 4K risks at times, and that makes me a really good year if I can consistently risk that kind of amount. And when you get to like the 20K risk area, it's like you're going for like a 500,000 year, a 7-figure year. And sometimes I just don't necessarily think that I need that in my life, even though it sounds nice. It's just in the moment, it doesn't feel good for me.
yeah, in the short term.
I used to not feel that way.
Yeah, well,
I guess it's like once you have something to lose, it's like before I had nothing to lose. It was like if my account blows up, so what? Like I'll move on to some other profession. I'll do something else. You know,
Mhm.
like if this isn't for me and I can't do it, I can't do it. But now it's like I don't want to blow up all that I make. Back then, it was like it's like a risk reward equation. It was so different in my mind.
Yeah, that's true. Um, well, also too, excuse me. It's also what we talk about all the time, which is like where you are in age, right? Like 20 to 30 is a big difference, for sure, in terms of either life perspective or financial, circumstances, like you're talking about, of how much you have to lose. But yeah, call it even, I don't know, as silly as like, what if we tested your testosterone when you were 20 and we test it now? Like, I'm sure 20-year-old Huddie had more testosterone than he does now, even though you're like lacking testosterone, right? You're still young.
All right. Now you're getting into like the
No,
offensive area.
but like we're not 50, right? But like we're not 60s, losing levels and hormones changing or whatever. But like this is what we talk about sometimes when we're talking about like the
Literally,
20-year-old
Kyle's just
trader.
saying, "Huddy," he's like saying, "Huddy, you're less of a man now."
That's not what I mean, but like
Not very
your
nice.
your risk appetite for whatever reason has dwindled, and honestly, that's probably a trend for most of us, and will continue to be a trend as we go into 30s, 40s, 50s. It's just like it's why you see the 20 something trader crush it, and the 30, 40, 50 year old maybe take some time to get some kind of wind under their feet, because it's just life circumstances, where they are, who they deal with, the responsibilities they have. Like there's so many factors, so
But here's the great thing about this profession, right? And I think this is a good lesson for everyone. There's literally no rush. There's no
right.
rush to be putting on size. I've done it in the past. I don't do it right now. There's probably a year coming up in my 30s at some point that, for whatever reason, maybe I like the strategy a lot, maybe I like the market conditions a lot, maybe the size comes back. Um, but there's no reason for me to push the envelope if I don't feel like I should be doing it right now. Because I can do it at any moment. Like I can turn it on when I want. I just got to continue to do my job and make money. And if conditions are really ripe for it, then okay, push the needle and step out of my comfort zone. But I have my entire life to push size, and it doesn't have to be necessarily this year. And there was years where I have done it, and those years I was paid for it, but it was the right market conditions.
Yeah.
So that's what's cool, right? Like you get to you get to choose how much you put in, how much you take out.
I like that. Yeah, I agree. Lost our place here. Let's go up.
I see Ferrani said, "Do you guys see the controversial?" Okay. Not really. Okay. Tweet from Evan Skunk talking about 2024 being better than 2020. I feel a lot of people had something to say, Lowell. I did not see the tweet.
I I
Did
did, and
you?
I actually commented on it just because it was a good discussion. And yeah, I know what Never means. Like not controversial. There was just it provoked a lot of interaction. Um, Essentially, Huddy, what Evan Schunk said was just talking about how great of a year he's having, and how much opportunities out there, and he's like, he's like, this has got to be better than 2020. And he had a poll, and people voted 2020 or 2024, and like the poll 2020 won by a landslide. Like it wasn't 80-90% of people voted for 2020, 20% voted for 2024. And then a lot of people commented, including myself, talking about either why they agree or disagree. Obviously, most people was the disagree of like, no, 2020 was nuts, and they gave their examples of why. I specifically said that I can see why Evan sees that, because he is a gap and crap trader. And in 2024, I am also a gap and crap trader. I was not a gap and crap trader in 2020, so I can't speak on 2020. But what I can say is, from just looking at gap and craps from the sidelines, but then taking them seriously this year, it's like, yeah, there's been a ton of them. There's been a ton, right? But as a general overall market theme, of not just gap and crap traders, but all things markets, I'm with the consensus, which is like, yeah, 2024 will go down as a great, great year of a ton of opportunity, but it does not match up to 2020. I can't give you an exact numeric. Like if 2020 was a 10 out of 10, I don't know if 2024 is a 7, a 6, an 8. I don't really know. But what I do know is like 2020 was a true insane beginning of a bubble. And maybe 2024 is, but maybe it's a smaller bubble. But the point was, it was manic. Like people who didn't know how to trade started trading and made ungodly amounts of money. They're not really doing that right now. If they are, it's because they own things long term. I'm talking about people started day trading in the middle of COVID and started making money. I don't see that happening currently, right?
I think it's such a subjective. Sorry, were you
No,
going?
no. That was pretty much where I went with it.
It's so subjective. This comment, like, is 2024 better than 2020? I mean, it really comes down to personal performance and the strategies that we trade independently, right? Like, you can't group think that question, and obviously it's going to be controversial, I guess is what I'm saying. What we haven't had right now, and maybe like Kyle said, like it could come, I suppose. It doesn't really feel the same, like in terms of like uniqueness that it was, and with the stimulus and everything. But we don't have a GME to 500. Okay, like we don't have like absolute crack euphoric pandemonia market. We do have a good, and I think the one thing to kind of like maybe hang your hat on, because this was what the prediction was all along, is that day trading volatility picks up, so to speak, on the election years. Maybe there's reasons to prop the markets up. Maybe there's reasons for optimistic buying. Who knows what the psychological factors that go into why election years are good? But I think generally when trading, it's like you could almost seasonality pick the years to be an active trader and pick the years to not. You could in theory do it. I think there are certain events that align that say, okay, this year should be better than the other ones. And for the past like maybe third election cycle, I don't really remember 2016 all that well. But it holds true for back to back. Like 2020 was a great year, and 2019 leading up to 2020 was great, and now we have 2024 leading up to 2025 has been great. And I suspect if these dominoes are going to follow each other, 2025 is going to be great all the way up until mid March, and then it'll cease to exist again, like just like that. It'll just turn off. And I think that's the biggest takeaway. Like you really can't say is one better than the other. You can just say, hey, election years are great. My strategy performed, and either I traded better in one year or I traded worse. But there were a bunch of gappers that faded in 2020. There's a bunch of gappers that fade now, right? Yeah. I don't want to go on a whole dissertation of gappers. I just kind of talked about gappers because Skunk is a gapping crap type trader. He's also got some other strategies, but definitely 2020 is more on crack. But I think as far as like patterns go, like there have been so many patterns both years, and it just depends on how you performed on them, or if they're even your patterns in the first place.
Right. I'm trying to check something too. Yeah, you're right. It didn't go there. I was about to say in GME's defense, it got pretty high this year with Roaring Kitty coming back. But right, it was not. It didn't get. It got about halfway there. The high back then, or I guess after the reverse split, was like 120. It got to 60s. So, and back then, what was like 500 before the split or whatever it was. So, let's arguably say it got to, or guesstimate, it got to 250 pre-split this year, which is still impressive.
That's even insane to think about. Like, I didn't even think about that, like on a reverse split adjusted basis. But yeah, I mean,
yeah,
10 to 65 is probably
it held its gains very well.
Move.
It's very well. And Roy Kitty coming back was definitely a milestone for 2024. But yeah, it was more manic, right? In 2021 specifically, which is when actually GME went nuts. The whole world was watching. I don't think the whole world was watching this summer for GME. But
no, it's not this like Peloton to 200. Like these things are crazy,
nuts, insane. Yeah, like what was that? $250 billion of a market cap, just absurd. And it's now at
for a bike with an iPad.
Yeah, it's done. Now it's like almost bankrupt, I think, or something like that. Like they're in the dumpster. Glade asks Kyle, you may have talked about this before, but are you looking to hold? Are you holding any?
Okay, you have to keep this one short, Kyle.
Yeah, I know, right? Are you holding any? Are you holding any crypto like if Doge, Ethereum, etc.?
Just one or two sentences.
Yeah. If yes, where did you buy it, and what are your plans for it? Glade, I don't own any crypto. No, that's bullshit. See this?
Yeah,
this is
Kyle's a big non-believer.
This is all a show. I don't believe it in at all. Yes, I own Doge. Yes, I own Ethereum. Doge is more of a gamble than anything because it's a meme coin, and I knew momentum would come back into memes at some point. So I have Doge from like 6.5 cents. I actually just sold a portion of it in the Clover chat yesterday at like 36-ish. So like a 4 or 6x, or 4 to 5x on just a portion. And yes, I still own Ethereum, Bitcoin, a little bit of Solana, a lot of Pepe, and plans for it. Sell it into strength. I think we're just at the beginning cusp of what I think is the cycle that crypto has. And so you're seeing signs of that. I think this is going to stick around for maybe another 3 to 6 months if I had to rub my crystal ball. And I will continue just selling into strength that I deem solid. If that makes sense. So that is the plan. Because once everything dies, let's put it that way. The last sentence is, once everything dies, I will not be holding Doge. There's no reason for me to hold Doge back down to 6 cents. Let's put it that way, right? So, yeah, Jar Max also adds on from his comment earlier saying, def a lot of FOMO, but not much continuation. Yeah, it's in very rare places, right? It's either in like a BHUN or DJT or a Fannie Mae, but a lot of other tickers are like one and done, right? Like MVST today, up 400%. Could it go higher tomorrow? Totally. Will it? I would bet not. Doesn't mean I'm going to short it, but being up 400% one day, it's hard to replicate that at a second day. So yeah, I would agree with that statement. Juan agrees with the less trades, more quality. That's also a theme as traders get older and throughout their years. It's like I rather make $100,000 on a really good once a year trade than try to scout my way with 1,000 trades. Fran asks, is anyone in Doge?
The way I like to think about it is like, I'm in Doge as well.
Hey,
I found some money in my Robinhood like 2 years ago, and I bought Doge. It's like 7 or 6 cents. It's going great.
nice.
Oh my God, I cannot believe how much it's up now.
It was at 6 or 7 cents for years. It formed a great base. Everyone forgot about it. Just chilling at the lows.
Yeah, I was like, I found some money in my Robinhood from like way back in my early trading days, and I was like, this is just sitting here. What can I buy? I put it on the Doge. I was
Doge.
Like, that's it. Why not? And it worked.
That's funny.
It's going great. It counts up huge.
Mm-hmm.
What was I gonna say? I forgot.
We're talking about what we're talking about.
Less trades, more quality.
Yeah.
I always think like about it like this. There's a Super Bowl of plays, right? Where it's essentially like an A plus, and that takes a lot of focus, maybe increased risk, et cetera, et cetera. And then you have all your other regular season games, which are just really just practice for the bigger deal. So it's good to like keep the hand, I think, at least fresh, like watching price action, taking entries, holding through plans, and then, really putting on the risk when Super Bowl comes around and focus to make sure that you do everything that you've been doing well the whole year.
I like it. I like that. Jabril, I've been trading for 20 years and I have never seen the market just consistently bounce back 100% of the time. Almost immediately after any drop, basically can't hold on to puts or gains. Thoughts? I mean, makes me think of our conversation just about 2020 versus 2024 because that made me your comment without knowing what year you're specifically talking about. I think you're talking about 2024, but like my brain immediately went to the fact that in 2020, first green days were breakouts. Like a stock would run, call it 300%, pull back 20, 30% over like a day or two or one red day or two. And then the first day it had a, first green day, what we would call in this market, it turned into a breakout. It was not a first green day anymore. It was like, oh, great, it's up again. Great, it's going to break out the highs that it set 2 or 3 days
Everyone's
ago.
going to buy it.
Yeah. It was mad crazy. However, Jabril, I think I know what you're saying, though, because if you looked at like the DJT bounce on the top day, yeah, it pulled from, 50-something to 40-something, and then bounced all the way back to new highs by the end of the day, or 45, right? Went from 45 to 35 or whatever it was. And then by midday, the bounce went straight back to new highs by a couple cents. Or if you look at DXYZ on the top day, it pulled from 50 to 38, only to bounce back to 48. It did fail at that level, but it got pretty damn close to highs. So yeah, I do know what you mean. I think there's just a lot of strength, like Huddie mentioned, from the election, from just we're clearly in a risk-on environment. And with that risk-on environment comes a lot of people willing to just bid stocks up. And on the flip side, being a risk on environment, you also have a lot of short sellers who are willing to also risk their money. But in doing so, it can get crowded. And if there's too many shorts on one side, some bounces will just keep bouncing. And everyone's like, what's going on? So it's almost like a risk on environment, but you have to be a bit selective in a window, I would say, like really get in, maximize when your trade's working for you. And then, the moment it's, at least for short sellers, the moment it stopped working, get the hell out, because it's going to, strength might just follow right back into you. So that's my thoughts, at least. And that's the lesson I learned from DJT. I gave so much back into that bounce because I just didn't believe it was going to go that high. And then it did. I was like, wow, that wasn't fun. So Knife says, in my opinion, Huddie's wanting less stress on trading and focusing on enjoying life, the benefits of profits through great life experience. True. Huddie is a big life experience guy, and I love him for that, because that's definitely true.
Yeah.
You want to trade.
And that's kind of the MO. That's why I got into trading in the first place, was just like I wanted to make enough money that my expenses were covered. And once my expenses were covered, now we're in the glory field, right? We can spend whatever we want. We can do whatever we want. We don't have to answer to anyone. I don't have to work if I don't want to work, if the opportunity is not there. And that's really why I got into trading. And like, now that I'm here, it's like, why am I pushing? Why am I pushing for another mill? I just need to sustain, really. I just need to have strategies that make me, again, that cover my expenses and give me a little excess to go travel and eat wherever I want and drink wherever I want and travel wherever I want. Like that's all I care for, right? And invest, the rest of the money and keep building towards, longevity. It's a super simple blueprint, and it seems to be working really well so far. Like, zero stress. And all just like reaping the benefits of trading, which is, hard to get to, but definitely worth it.
Yeah, it's a reminder, most people want to trade to live, not live to trade. So
there was a time where I literally was I was living to trade. I was literally at the computer. And maybe this was I think the one thing that separates the winners from the losers is work ethic. Like, you got to want it. And that it's got to breed some kind of obsession or devotion to just being here day in, day out. No excuses. And there were days where it's like the 6 hours would just fly by. Like, I would just like sit here and watch tape, watch charts, watch price action after hours, like print out charts, put them on the wall, like just so much. And now it's less of that, right? Like, I got over that hump, which I think was a necessary hump. And then I was like, okay, I don't need to do this anymore.
Yeah, totally.
This intense.
And that's a good quality to have, actually, Huddie, because you see, like, chat, you see people like Huddie who are content, found what he wants to do, will sustain it, will keep growing it as he pleases, that long as it doesn't, get in the way of him doing what he wants in life, and does it well. Versus the flip side, which I think a lot of people, including myself, can fall into the trap of like, enough's never enough, more, and all then all of a sudden you look back and you're like, wait, what did I start for? So it's good to have that reminder of like, hey, there is enough. Just because you may not feel like it's enough doesn't mean it's true, right? Set goals, get to them, and then once you get to them, set new goals. But hopefully the new goals are things that are different, that are going to help you grow, and not necessarily things that will, just keep you in this hamster wheel of, whatever that is, of never feeling enough, and then going for
making
more,
money
going for more,
It's an endless pit. Like, once you've made money, you want to make more money. Once you make more money, you want to make more money. There's no goal. There's no end result. It's just you're making money, and like I don't know. I got kind of sick of that.
He's like, I'm done.
Like, I want to make money, and I want to like have an income, but I got tired. I got burnt out. Happens. I've been doing this for a long time. You guys do this for 7 years.
Yeah. Ricky asks, "Hey guys, trying to find something new." Sorry, what's up?
I was going to read it. You can read it.
Oh, okay. Trying something new. Hot small caps. Wait, whoops. Lost it real quick. Hot small caps breaking out opening drive. Longing, risking low of day, seeing where they go. Thoughts? Just raising risk. Just raising risk every 1 or 2 R. Not feeling scalpy. It seems to... Maybe you have more details in your brain of how they go, but just from what I read there, it seems too vague. Like hot small caps, there's 5 to 10 of them every day. There's tons of hot small caps. Breaking out over opening drive, is that a morning spike? Is that just buying out the open? Are you actually looking for a technical breakout, which again we just talked about don't necessarily happen all that well. They happen maybe briefly, but don't necessarily stay up too well a lot of the times, more so than not. I don't really know how any criticism or insights I can give you. It seems too vague for me. I can't wrap my head around what you are referring to specifically. I don't know if you have a better idea, but
Yeah, like you definitely have to like boil it down a little bit more. Like what is a hot small cap? You know, like define that, right? Is it the volume? Is it the percent gain? What is a breakout? How much consolidation does it need? Is it, the market highs? Is it the pre-market highs? There needs to be more substance here, or else you're just going to be buying every high a day break. And I'm telling you, if you do that on every single stock that's just gapping up and you consider it hot, like a lot of them fail, right? So how do we define that criteria a little bit more so that we're in, more of a winning odds bucket than just like, playing a 50-50 game. And that's possible, but things I would look into is market cap, is volume, is percent gain on the day, catalyst driven, maybe. There's got to be more, definitely, because I think trying to catch the morning spike on small caps is probably like a lose-lose situation. And I think a lot of newer traders get into this game thinking like the goal is to, oh, see something on the scanner, like holds a couple levels for the first 5 minutes and then goes higher and let's buy it for the morning spike. Like I think you learn, most traders pretty soon on, that is a very finicky, not profitable situation.
yeah, it's difficult to do. Um, Test asks, would you ever start a small account again? And then alongside that, Fran asks, oh yeah, are you guys ever thinking about doing the small account challenge or small account contest again? So technically, Fran, we never really did it. We couldn't get organized, and Kellogg wanted to start his trading his Roth IRA the moment he mentioned it, and it was like, well, Huddie Dom and I kind of have to set up a new account that's small to compete, but he was already starting across the finish line, so to speak. So that technically never happened, but then to test question, would we ever? I mean, technically I have an E-Trade account. It's not, I don't know if you'd call it a small account, but I have an E-Trade account that has slowly dwindled. One, because I've just pulled money out because I'm longing less, and two, if I have longed, I've actually lost a little bit of money, so it's bled maybe, a few trades in a row now. But that account's only 29 grand, so it's just above PET. Now, granted, that's not really a small account. When I think small account, I think most people are referencing like what I started with, which is like a 6K account, 10K account, maybe 15K account, clearly under PET, right? I don't think I ever will. I don't think I see the need necessarily. And I think people would disagree with me because, like, well, you doing it will help people who are under PET show you how to do it. But like how I trade with the setups and how I trade them, like someone under PET could do it. I don't, like I said to the first part of this conversation, like I don't trade 10 tickers a day. I average 2 trades a day. Now, granted, that's more than a person at PET could take. But again, I am looking for quality, and I like to represent the trades I take in a chat room or alert or like to teach on are the quality trades that I think most beginning traders who are maybe trying to learn a setup can take that trade. Not necessarily follow me by any means, but that was, and I honestly, I say it because that's what I did. Like the trades I take now are maybe a little bit different in how I size or how much patience I have, but the setup itself were and is trades I did take under the PET. So yeah, hopefully that answers your question. I don't know if you have a different answer, Huddie, but
Yeah, I reset my accounts all the time. I mean, I generally trade with a small account. I generally don't trade with an account over 6 figures. Again, I have different goals. Like if I make 200K in a year, I'm very happy. 200, 300K, great. If it shoots to the outside of 600, phenomenal. If it, lands at 100, okay, go on to the next year, right? And so I'm generally to hit those numbers. And again, nothing that I do is probably repeatable, and it's not a recommendation to do anything, but to hit those numbers of like 200K in profits a year, I need like a 50K account. That's what I need. And that limits me from getting too big in any situation. Like I don't really trade on margin ever, and really prevents me from blowing up. When I have like the 100, 200K accounts, that's when like I get a little trigger happy with the buttons, and all of a sudden I'm like way too big in a stock. Um, so I mean, yeah, like Kyle said, I don't really know what a small account is. Like I probably would never reset myself to 1,500 just because this is my income. This is my livelihood. Like this is what pays me my most amount of money out of anything that I do. So it needs to do what it needs to do, right? Like I can't just put it down to 1,500 and start making 30% on a 1,500 account just to appease the public. Like that's not how my income stream works for me. I need to make money. So I need at least 50K, and I need to take the trade seriously, and I need to risk what I need to risk. Otherwise, my bills aren't getting paid and my expenses aren't covered. And now we have an existential crisis and a new truth for the next Wine Wednesday, right?
New
So
truth. Yeah. New truth is I tried a small account and my rent is due.
yeah, that's my truth. My
It's
truth is I
fine.
can no longer do this.
Yeah.
I need to go back up. So yeah, I mean, I trade with a 40, 50K account, and when it gets over like 120, 140, I kind of like look at all my strategies, kind of redefine them a little bit, and then reset the account to 40K and see if the tweaks work. And you know, that kind of lowers my risk because my risk kind of grows with the account size that I have. And um yeah, that's kind of what I do. And I like it that way.
There you go.
So I would not start with a small account again.
Yeah. For Rainy asks, are we
But I
watching
do think
MVST for a Billy Boy gap up? I mean, not really. I mean, it wouldn't shock me if it gaps up, but I have not. I've had a bad history of trading them. That's my own fault, and because they're so, I wouldn't say new, but there's so much variance in them by how they close, how they look when they close. Are they well off their highs? Are they at or near their highs? You know, I've learned just having a billion shares traded is not enough for me personally to feel confident about taking them as trades. However, yes, there is still a tendency for them to gap up the next day for sure. But no, I am not taking it or looking at it. I will have probably a chart up of it, but I won't be participating in any shape or way or form.
so. I'd have to rerun the numbers on the Billy Boys. I like in my mind, and I've never done this, but this is kind of the strategy that I have in my mind that I wanted to like test. I just don't know if there's enough Billy Boys to really say that the strategy would be profitable or not. Like it really is more of a gamble than anything. And again, like we want to put ourselves in high odds buckets with good risk reward. Now, the problem is that I just don't know if it's a high odds bucket. I really don't. Like you have a stock that's up 400% on the day, it's traded a billion shares. Like what are the odds it gaps up? I really don't know. You know, and again, there's just not enough samples for me to ever even trust the data. What I do trust is when they do gap up, the average is quite big. Like the average gap up from a Billy Boy is close to 50%, especially when they close green like this. You can even see like CERO just 2 days ago, traded a billion shares, closed at 20, gap to 30, right? It's like literally a 50% gap up. So that's the enticing thing to them that when they gap up, it can be quite extreme. It's just like how do you position yourself for it, and really how do you even trust the data in the first place when there's so small samples? The strategy that I kind of like the simple way to do it would be like kind of buying the close and risking something super wide so that you're in it for the after hours and pre-market, and then just seeing if you get a gap up sample. So MVST would be kind of like a long at 80 cents, maybe risking 70, 765, like the lows of the consolidation, and then just seeing if you get a gap up. Um, and the data says like if there is a gap up, it could be a lot bigger than the gap down. But again, like it's like a weird area, right? Like you're dealing with stocks that are extremely extended that have the potential to offer, can do a lot of situations from up here that it's just like again really hard to want to trust the data. But CERO gapped up 50%, MVST looking like it's gapping up right now. So it's something that I kind of want to run the numbers again. I still just don't know how I'd want to implement strategy in terms of like how do I size in, how do I position myself for the gap. I think that's harder.
60% of the time, they gap up every time.
Yeah, something like
I'm
that.
an idiot. Ignore me. Um, Anyways, where do we leave off? Question for you specifically here, Ali, or he doesn't say your name, but I'm going to ask you because it's more of a systematic trader approach, which you've adopted this year. How do you deal with FOMO when you trade less and are trying to be a systematic trader?
Yeah, it's tough. It's really tough. Every day I have to kind of go through these motions of watching Kyle trade the things that I quite honestly know how to trade. Like I really do, and I literally have to ignore them because I know that that's not my business's primary source of income right now. It's just right now it's not. And so how do I deal with FOMO and trade less when trying to be a systematic trader? I guess it all comes down to like journaling is how I deal with it. And at night, I kind of just go through the monthly review and I say, okay, like obviously there was money to be made over there, but like how much money did I derive from this setup? And what good did it do? Like, do I need more? Is always the kind of question. Like, am I being greedy? Like, I just want to make money from everything I can make money from, or do I want to make money very specifically from the things I plan to make money from? Right. Um, it's not easy to ignore a good setup. It's not easy to ignore a breakout, but I've ignored tons of breakouts. Half my career was about ignoring breakouts, and I saw people making money on them, and I know what a good breakout is. But I know that that's not my primary income source. I know that that over the long run does not make me giblets of money. And the reason that first red days cause me any kind of mental hardship is because they do make me good money. That is a profitable strategy for me. It's just when I'm trying to be systematic and I'm also trying to be discretionary, it activates two different parts of my brain and they start to conflict with each other. And I start doing both of them really badly. I don't know what it is. I don't know why systematic versus discretionary is that way, but that's how I feel it is. And when you're trying to do both at the same time, you end up botching both. Um, so again, like for me, it's just like I look at the numbers, I see how much money the systematic trading will make me every month if I just like follow the blueprint and try to emulate what the data will say it'll make. And there's really no reason for me to want to trade anything else. So it's like I have my focus, right? And again, like what also helps me is that my sizing is based off my account size, right? So if I am taking something that's not systematic and it decreases that systematic account's buying power or risk tolerance, I should say, then I'm really just digging myself into a further hole on something that's like again not a primary business source. So that's what I think. It's really about like defining where you want to make your money and then doing your job. Like go do your job, right? And if it's not part of your job, then don't do it. And you got to find the discipline to not do it. You know, there's tons of ways to make money in the market, and it's just like, is it the right time for you to do that type of setup or strategy? I guess is that within your scope. Right now, for me, it's like I want to be a systematic trader. I want to barely watch the market. I want to have zero interaction, right? Um, and what does that mean? That means I have to enter my positions, set my stops, and then walk away. Like stop watching, go to the gym. I go to the gym at like 8 a.m. Pacific Standard Time. So 11 a.m. Eastern, right? Like an hour and a half in the market, I'm pretty much done with everything. And I will not make another position, even if there's a parabolic, even if there's a breakout, even if there's a breakdown. Like it's not what I'm here to do right now. And I just got to remind myself of that as much as I can, right? Like I see Kyle make $45,000 on whatever sticker, and it's like, that's great for him, but that's his journey. That's his life. That's his course. That's not where I need to be right now. Um, I want to know how he did it. I want to learn from the exceptional charts. I want to learn about A plus opportunities. I always want to be a student of the market. I don't want to ignore necessarily, but I want to know what I'm here to do. I used to give webinars for Sykes all the time, and I would say like I'd see like a stock up 3 days in a row, and I'd say, hey, my job today is to lose or make money on this. There's nothing else in the market that matters, right? This is my focus. So you got to have your focus. That's what I would write down. Be focused.
There you go. Beautiful. All right, we got 7 or so minutes left. Let's speed run a little bit. I did actually miss a question from earlier. Probably someone from Good Morning Nasdaq, as they asked, Kyle, how did Mullen go today? Did he take any profits or stop out after the huge reclaim? I indeed did stop out after the reclaim. I was risking high a day, and as you saw, it did actually come all the way back and break high a day. So I did stop out for a just under 6K loser. Which is fine, but yes, clearly not ready yet for a fade. Probably some still buyers and or short sellers like myself who thought it would fade and isn't ready to do so yet. No idea what it does from here, which is unfortunate. But yes, I did stop out for a loser, unfortunately. But part of the game. So, anyways,
I'm gonna speed around some of these questions
go
since we
for
don't
it.
have much time left. And guys, it's the saddest parts of my Wednesday is leaving you guys. It's so much fun. That sounded sarcastic. It wasn't. um, okay, so good evening, gentlemen. If you were under PDT, what would your go-to strategy that you would consistently to get over it? I know plays come and go, but what would be your A plus? If I was under PDT, very tough for me to answer. Very tough for me to answer. Um, The only way I have ever grown a PDT account, this is why it's tough for me to answer. The only way I've ever grown a PDT account is by buying OTC breakouts and swinging them overnight. Like first green day, OTC breakout, train a bunch of volume, breaking the highs, like a Fannie Mae the other day.
I literally was gonna say I would
That
have
that
bought
is what
Fannie
I
Mae.
would grow my account on.
Yeah, Kyle with a
Yeah,
20
Fannie Mae
Kyle
over
with a 10K
240
account would
was a
have
great one.
taken Fannie Mae overnight last night and sold into this morning. 1,000%.
The 10K position size with risk on 235 or something like that, and maybe 30% the account. That's what I've always done, and so there's not much OTCs anymore. I mean, there was Fannie Mae, that's a great one, but it's hard for me to kind of talk about it because like I don't think the gapper strategy that I again have all my focus on right now is great for under PDT, just given the fees. Um, and the like non-access to direct brokers. I think that's also probably a big hump because you're not gonna have the shares to short them all, and it's definitely a numbers game. So I don't think the gapper strategy is good for it. First red days, again, still the same problem. Like there's going to be a ton of them that aren't available at E-Trade to short, and you have to miss them, and that's problematic. So I don't know right now what I would do. I honestly, that's my answer.
Um, yeah, it is a tough
But I would
question.
buy Fannie Mae. I would have done that.
Yeah, when you see that around, that's a good one. My quick answer would be, wait, I know plays come up, but what would, I mean, yeah, my A pluses would still be the same. So the really good first red days, I probably would still be trading. Again, same thing with the small account question earlier on. Like the DJTs, the DXYZs, the PHUNs in the last 3 to 4 weeks, like those would be the accounts. Those would be the trades that I still would grow my account, no matter what size it is, because that is just such a setup that I know like the back of my hand, that I literally look forward to. Like that is what I stick around for. Like if there's one setup that I only would need to trade, to the previous question about systematic trading, it wouldn't be systematic, but if I had a discipline to only take 1 or 2 trades a month, like those are the trades I'd wait for, 1,000%, no matter the account size. So, it's hard to say because I'm not under the PET, but even when I was under the PET, I was taking those kinds of trades. So I would try to not reinvent the wheel and just keep doing what was working before, or whether I was under or over it, and do that. So that's where I'm at with those. So, anyways, question for Emilio or from Emilio, Fannie Mae looking for first ready tomorrow. Bounce back pretty big. Yeah, do we doubt the first ready since it bounced back all the way? I am a bit 50-50. I don't know. Part of me thinks the bounce was just shorts covering, thinking the first ready is going to come. So they all got squeezed out. So then there's no one left for it to fade tomorrow. But I also think that if it's not shorts and it's just buyers, then yeah, maybe there is another day where this goes to 350 plus. The hard part is the only way to find out is to just watch action tomorrow. And so unfortunately, I kind of have to just react to what happens tomorrow and only guess as best as I can guess, which is guess. So sorry if I that's my thoughts. I don't know if you have any different, Huddie.
I'm kind of getting confirmation that Matt Monaco and Bryce Tui will be on Wine Wednesday next weekend. Next week. Don't hold me to it, but I think they will be.
Fantastic.
Fannie Mae, honestly, yeah, I think you're right. I think this end of day action is like I don't think Fannie Mae is actually that good of a first red day. Call me green or out of practice, fine, but I don't think it's that good of a first red day. I think it's kind of like if I'm judging from the breakout level, it's really only up from 240, which is where I think support should form. So pullbacks, sure, like 320 to 270 was a great pullback, but do I really think it has to like go to low twos? Like that seems, yeah. I think where I'm at with this is a lot of shorts chased this down into the red green move. They caught it and held it and popped it right back. So all the shorts covered into end of day. And I still think you kind of have the same setup as it was today. I still think there can be a pullback that maybe this thing needs to trade in between a range between 320 and 270. And so that 50 cents a range maybe provides some opportunity if it is red and, maybe just weaker tomorrow than it was today. It really hasn't spent that much time being red in a number of days. So that might be the trend shift here. And like Kyle said, like as you're watching it, if it feels right, then I think there's no harm in trying it. But I don't think this is some like I wouldn't say this is some like A plus formed red day. Like I really think what a good red day would be some type of consolidation here for 3 days, a breakout over 320, run to like 550, and then do it again. and I think that one would be kind of better. Just because this has taken so many days to get to where it is, it just doesn't feel as extended as it can be. But I also don't think it's going to 5 right away. Like I think it's going to take some time. I think we showed some weakness today. If there's no shorts tomorrow and it's just going to be kind of weaker volume day, then yeah, I think it's just going to kind of drift off and maybe like wind up at 270, 280 before starting to build a base. So if that's your MO, like yeah, it could be there tomorrow. I would watch it.
Yeah.
I'm probably like I'm on the boat where it's like I don't need to trade it, but I'll watch it. It's gonna be on a screen for sure. It's in play. It's got good volume. It's got good extension. It's got good range. It's an OTC. So
alrighty, that is our time. I do have to get going here quickly. We'll talk. I'll go over one last comment because I really like this comment. But if we didn't answer your question, feel free to pop in Good Morning Nasdaq or join the room. Plenty of questions are answered in there every day. Or save it for next Wine Wednesday. Either or. You know, if Bryce or Matt come on, that's also another great set of traders you can ask questions to. Last comment here is from Knives, referring to our small account challenge conversation. Thanks for the honesty. A lot of these teachers, quote unquote, try to do these gimmicks, the small account challenge. They end up just risking 50% of their account, which no new trader should do. Knives, I couldn't agree with you more. Right? I've always struggled with that idea because I know myself, and if I did a small account challenge, say 10K, knowing I can trade with an account 20x, 30x, 50x bigger than that 10K account, you're damn right I'm not going to be disciplined and going all in, and it won't matter to me, where 1,000% a new trader can't afford to do that. And so, yeah, I've seen it before where traders are like, small account challenge up 1,000% this week. And it's like, really? Like, come on, you know? You can, because you're an experienced, decade, who knows how long, multi-millionaire trader, right? Or you have the experience, wherever you are, that person is, they have the experience to go all in on a small account because it's, who cares? But when you're a new trader with only 10K to your name and that's your account is 10K, like, yeah, it's a completely different scenario. And it's just not realistic. So I couldn't agree more. So anyways.
just a marketing shtick. That's really all it is. Like when people say, I'm gonna look, I'm starting over with a 50K account. And, oh my God, it's 600K in 3 weeks. It's like, okay, yeah, but that's not like you could reload the account if you lose 50K because you have $1 million, right? Like there's no fear Shakespeare, right? Like it's completely different. And it's not, yeah, this person nailed on the head. It is not realistic, and it's really just showy more than anything. And it's really, I think, if you're a trader and you're trying to make money, like not what you should do unless you're trying to like, I guess, build subs, right? Like it just seems like a gimmick to me.
Yeah,
it doesn't make any sense.
And in fact, last thing I'll say here, to the small account challenge idea, yeah, I do have a Roth IRA that has 2 years worth of 6K each, so 12K total, right? It's a 12K account. Yeah, you know what I did? I went all in on IBIT, the Bitcoin ETF, and it's at like 80K now. So, like, yeah, small account challenge, 12K to 80K, look at me go. Yeah, because I just bought one stock, didn't do anything with it, because it was a long-term thesis that is completely separate of my own trading strategy, and look where it's at now. In fact, sorry, didn't have it all in IBIT. Owned it for IBIT for a while, sold it, bought MSTR at 135 or whatever, and now that's at 350. It's, so it's like, yeah, it's just not, it's all fun and games till it's actually real money with real people and trying to make it a real living out of it. So anyways, guys, thanks so much for tuning in. Thanks so much for the questions, a ton of them today. As always, make sure to like and subscribe. We didn't get on you today, but Dom is not so easy. I believe I'll double check with him, but I believe Dom will be.
Everyone hit the like button right now before you go. Everyone hit the like button. Everyone.
Leave Dom.
Hit that little thumbs up button right there.
Get him, Huddie. Dom will be hosting tomorrow, I believe. If not, you'll see both of us tomorrow morning. But if not, you'll see Dom's beautiful face.
Oh, I will not be there.
Okay, then you'll see.
I will not be there.
You'll see Dom and I's beautiful face. Have a great rest of your Wednesday night, everybody. And we will see you all next time. Peace, everybody. Bye.